Hello. So the one question on investment appraisal that I had given you as homework, let's see how that answer has to be worked out. I will show the question first and then we'll understand how are each of the working notes required to be prepared, so on and so forth. Now, assuming that production only lasts for 4 years, always read the requirement first. What does it say? Production only lasts for 4 years. Calculate the net present value of investing in the new product using a nominal terms approach and advise on its financial acceptability. Work to the nearest thousand. This is an important instruction not to be missed. Now, so you know what you have to do here, right? You have to prepare a statement of net present value. So calculation of net present value. You know the drill now. There is a serial number column, very important because we use it for referencing purposes. Excuse me. Then you have your particulars column. They have said it's a 4-year project to T0, T1, T2, T3, and T4. Okay, now let's build on this further. BRT company has developed a new confectionery line that can be sold for $5 per box. And that is expected to have continuing popularity for many years. The finance director has proposed that investment in the new product should be evaluated over a 4-year time horizon, even though sales would continue after the 4th year, on the grounds that cash flows after 4 years are too uncertain to be included in the evaluation. It's not as if the business will stop after 4 years, but the fact is that after 4 years, according to the management of this company, it will not be possible for you to predict the cash flows with any level of accuracy. So the best thing for you to do is prepare a calculation up to 4 years and evaluate. Do not go beyond the 4th year. Now the selling price per box is $5 per box. Then the variable and fixed cost, both in current price terms, this is important. Current price terms means this is without including the impact of inflation, will depend on sales volume as follows. Sales volume boxes less than 1 million hoga to variable cost is 2.8. 1 to 1 million hoga sales volume to variable cost per box is 3.0. 2 to 2.9 million होगा तो variable cost is 3 per box. 3 to 3.9 million होगा तो variable cost is 3.05 per box, which means year on year you will have to check what is the actual volume and then you will have to use the variable cost from this table. Same thing they have told कि अगर आपका sales volume is less than 1 million, fixed cost is 1 million. If your sales volume is 1 to 1.9 million, say for example 1.5 million hoga, if it is in this range, then the total fixed cost is 1.8 million. If the sales volume is 2 to 2.9 million, if it is in this range, then 2.8 million. And if it is between 3 to 3.9 million, then the total fixed cost is going to be 3.8 million. Okay. Now they have given you forecast sales and demand year 1, 2, 3, and 4. Okay. So let's understand how to deal with this. The production equipment for the new confectionery line would cost 2 million and an additional initial investment of 7,50,000. Okay. The production equipment would cost 2 million and an additional investment of 7,50,000 would be needed for working capital. Tax allowable depreciation on a 25% reducing balance basis could be claimed on the cost of equipment. Profit tax of 30% per year will be payable 1 year in arrears. A balancing allowance would be claimed in the 4th year of operation. Okay. The average general level of inflation is expected to be 3% per year, and selling price, variable cost, fixed cost, and working capital would all experience inflation of this level. BRT company uses a nominal after-tax cost of capital of 12% to appraise new investment projects. कितना होगा? After tax cost of capital of 12% to appraise new investment projects. So this is the discounting rate that you have to use. Now, whenever you have a question of investment appraisal, remember you need three things. What are these three things? One is the amount of cash flow, one is the timing of cash flow, and the third one is the discounting factor. Now, to calculate the net cash flow for each of the years, what all will you need? You will need sales, because it is the assumption कि जो भी sale होगा, all of that is cash sale. Then you will need the data on cost, variable cost लगेगा, fixed cost लगेगा, फिर आपका प्रॉफिट आएगा, फिर उस पे आप टैक्स कैलकुलेट करेंगे. सो ऑल ऑफ दैट इज गोइंग टू हैपन. Another point is, see, it is a 4 year time horizon that you are basically evaluating, year 1, 2, 3, and 4. ठीक है. एंड उसमें भी they have said one thing, that profit tax of 30% will be payable 1 year in arrears. So that is, if you earn profit in year 1, tax will have to be paid in year 2. ठीक है. Let's leave this space blank. Let's start working on the ingredients of the final answer. ठीक है. Working note 1 is for what? Working note 1 is for sales. Now, if you observe, the sales are given $5 per box. And what does it say? The variable cost and fixed cost, both in current price terms, ये दिया है. BRT has developed a new confectionery line that can be sold for $5 per box. And if you observe this line, ये first line में उन्होंने दिया है selling price per box. And if you observe here, the general level of inflation would be expected to be 3%, and selling price, variable cost, fixed cost, everything grows by this percentage only. So $5 per box and inflation rate of 3% to be applied. Now, particulars, year 1, year 2, year 3, and year 4. Okay. Units sold. Let's take that data from the question. Now, year 1 forecast sales volume, year 1 is 0.7 million. 0.7 into 10 raised to 6. Why? Because it is 7 million. 0.7 million. 1.6, 2.1, 3.0. And last year, 3 million. Now, let's try to calculate the overall sale. Okay, so selling price per unit, current price terms, how much is it? $5 per box. This is without considering the impact of inflation. Okay, now selling price per unit considering 3% inflation. Okay, so rate of inflation is 3%. Current price terms mein the price is $5 per box. So, you have to use the future value formula here. This into 1 plus 3% raised to 1, 2, 3, and 4. Raised to 2, raised to 3, and raised to 4. Now, total sales, I'm going to write it in thousands. So 7 lakh units into 5.15 upon 1000. What you can see here is the total sale for each of the years expressed in thousands. What we did was simple. We took the units sold from the question, 0.7 million, 1.6 million, 2.1 million, 3 million. Usme we took the selling price in current price terms. Then we considered the impact of 3% inflation, and then we got our total sales, which we are expressing it in thousands. Now, working note 2 would be for वेरिएबल कॉस्ट। अब वेरिएबल कॉस्ट के लिए दे हैव गिवन यू सम डेटा, लेट्स सी हाउ दिस डेटा इज गोइंग टू बी यूज्ड। ठीक है, यहां पे इंस्टेड ऑफ सेइंग यूनिट्स सोल्ड, लेट मी कॉल इट यूनिट्स प्रोड्यूस्ड। What they have written is यहाँ पे sales forecast and there is no opening closing stock, which means if 0.7 million units were sold, that means 0.7 million units were produced also. Now, if the sales volume is less than 1 million, variable cost in current price terms is 2.8. यहाँ पे what is the sales volume? Sales volume is less than 1 million. So, variable cost in current price terms. ठीक है, where the sale is less than 1 million, variable cost is 2.8. Where in the second year sale is 1.6. Now look at the range where the sale volume is between 1 and 1.9 million, then the variable cost per unit is 3 per unit, again expressed in current price terms. In year 3, the total production is 2.1 million, and when the sales volume is between 2 and 2.9 million, the variable cost per unit is 3. And in the fourth year, demand is 3 million. If you look at this table where the sales volume is 3 to 3.9 million, variable cost per unit is 3.05. ठीक है, now all of this data has been given to you in current price terms. Now what you will have to do is variable cost considering 3% inflation. This into 1 plus 3% raised to 1. 1, 2, 3, and 4. Raised to 2, raised to 3, and raised to 4. So what will be my total variable cost? It will be units produced into this updated number. But the thing is, I want to write this in thousands. हो गया मेरा variable cost in thousands. Variable cost you have considered. Now let us go for the calculation of total fixed cost. Working note 3, calculation of fixed cost. Ab, this data also we'll have to take from the question. Fixed cost and everything considering the 3% inflation bit. ठीक है, अब come here. Where the sale volume is less than 1 million, total fixed cost is 1 million. ठीक है, so यहाँ पे total fixed cost will be 1 million. Where the production in year 2 आप check करो, total sale is 1.69 million. Now where the sale is between 1 and 1.9 million, total fixed cost is 1.8 million. तो यहाँ पे लिखो 1.8 million. Let's come to year 3. The total demand is 2.1 million. In year 3, sales volume is 2 to 2.9 million. And if the sales volume is between 2 to 2.22 and 2.9 million, the fixed cost is going to be 2.8. Year 3 में आप देखो total demand is 2.19 million, which lies within this range. तो आपका fixed cost in year 3 हो जाएगा 2.8 million. ठीक है, 2.8 into 10 raised to 6. And year 4 देखो, year 4 में your total production is 3 million. If the sales volume is between 3 to 3 and 3 to 3.9 million वाले range में होगा तो The total fixed cost is 3.8 million. This is fixed cost in current price terms. Now, this multi incorporate the impact of inflation and express that in thousands. Raised to 2, raised to 3, and raised to 4. This is my fixed cost in thousands. Okay, so three things you have calculated. Now, sales हो गया, variable cost हो गया, fixed cost हो गया. What is left? There is a piece of information given about investment in working capital. ठीक है. Initial investment of 7,50,000 would be needed for working capital. And if you observe this line, it says that the average general level of inflation is expected to be 3% per year, and selling price, variable cost, fixed cost, and working capital would all experience inflation of this level. So working capital भी कितने से increase होगा? By 3% every year, because that is the level of inflation, and you start with 7,50,000. Working note 4 is on working capital. So requirement of working capital कितना है? 7,50,000. In year 1, you need 7,50,000. This requirement will grow by 3% each year in line with the inflation rates. So, oh God, this plus this into 3%. Okay, this is your level of inflation. This is the requirement of working capital. Year 1 में आपको कितना working capital चाहिए? 7,50,000. So, working capital outflow. In year 1, you need 7,50,000. The business has just started in year 1. So, how much working capital would you need year 1 में? Starting में at the start of the first year, when you commenced the business, then you had no investment in working capital. अभी आप 7,50,000 डाल रहे हो. So this is the total working capital required. In year 2, your requirement is 7,72,500. 7,50,000 worth of working capital is already invested in the business, already circulating in the business. So, how much more working capital do you need? 22,500. In year 3, the total requirement of working capital is 795,675. 7,72,500 is already circulating in the business. So additional कितना लगेगा? How much more investment in working capital would you need? 795,675 minus 772,500. And this is for year 4. So working capital outflow in basically thousands. So I'm going to convert this into my thousands. ठीक है. ठीक है. I have my working capital outflow. Then what is the timing of working capital investment or outflow? Year 1 का working capital you would need at the start of year 1, which is T0. Year 2 का working capital you would need at the start of year 2, which is basic. Start of year 2 is the same as end of year 1, so you will write T1. Then year 3 का working capital you would need at the start of the year 3, which means the same thing as end of year 2. तो यहाँ पे हो जाएगा T2, यहाँ पे हो जाएगा T3. उस उसके बाद होगा release of working capital. Total working capital invested in the business is how much at the end of the project, at the end of year 3? अच्छा, नो, यहाँ पे ना दिस क्वेश्चन देयर इज समथिंग वेरी वेरी पिक्यूलियर दैट हाँ, सो इन थाउजेंड्स कितना है वर्किंग कैपिटल इन्वेस्टेड इन द बिजनेस? 819545, तो ये पूरा एट द एंड ऑफ ईयर 4 रिलीज हो जाएगा. आई विल ऑल्सो गिव यू अ specific note that you have to keep in mind specifically when it comes to a question like this. ठीक है. And what is the timing of release of working capital? Timing of release of working capital कितना होगा? This will be end of year 4, that is T4. ठीक है. वर्किंग कैपिटल भी देख लिया आपने. Now what else is left? The only thing that is left is tax allowable depreciation on a 25% reducing balance basis would be claimed on the cost of equipment. Working note 4, sorry, working note 5 is calculation of tax allowable depreciation and tax saving. Cost of asset. How much was the asset purchased for? The asset was purchased for 2 million. Less depreciation for year 1. What is the rate of depreciation? The rate of depreciation is 25% on reducing balance basis. This is 25%. You will get WDV at end of year 1. Which is the same as WDV at start of year 2, 1500. उसके बाद आएगा मेरा depreciation for year 2. कितना होगा? This into 25%. What will you get after this? WDV at end of year 2, which is the same. WDV at end of year 2 means WDV at start of year 3, 1125. अब इसमें थर्ड ईयर का डेप्रिसिएशन लगेगा. This into 25%, 281.25. अब what you get is WDV at end of year 3, which is the same as WDV at the start of year 4. 843.75. Now, please understand that when this kind of information is given to you, यहाँ पे यूजुअली क्या होता है क्वेश्चंस में, दे स्पेसिफिकली टेल यू दैट इन द फोर्थ ईयर द मशीन इज सोल्ड फॉर सो एंड सो. फिर आप निकालते हो बैलेंसिंग अलाउंस, बैलेंसिंग चार्ज, वॉट एवर. In this case, the disposal value of the machine is not actually given to you. They have not mentioned you at what value will the machine be sold at the end of its useful life. All they are saying is a balancing allowance would be claimed in the fourth year of depreciation. So here I'm going to write the question is silent with respect to disposal value at the end of the project life. So take it as 0 and uh, nothing with respect to disposal value, and claim full WDV as balancing allowance. That is as good as saying कि it was disposed of, but you did not receive anything. So what you have is you will have 844। ठीक है, अब यहाँ पे आप लिखो पर्टिकुलर्स, ईयर 1, ईयर 2, ईयर 3 and ईयर 4. Tax allowable, depreciation slash balancing allowance. If this is tax allowable, depreciation or balancing allowance, what is the amount of tax saving at the rate of 30%? This into 30%. So what do I get now is, and acha, one more thing that I have to write is the timing of this. Okay. Timing of tax saving. Now, because tax is in arrears, this depreciation is debited to P&L of year 1. Tax saving will happen in year 2. This depreciation is debited to P&L of year 2. Tax saving will happen in year 3, year 4, and year 5. Now, what we have to do is we have to populate the statement of net present value. Okay. Let's start with the first line item, which is investment in new machine. How much is the new machine for? The new machine is for 2 million, and the answer working has to be in thousands. So uske hisab se you will have to do it. Then sales, which is working note 1. Variable cost, which is working note 2. Fixed cost, which is working note 3. ठीक है, सेल्स आप यहां से उठाओ. ठीक है, वेरिएबल कॉस्ट ब्रिंग इट फ्रॉम वर्किंग नोट 2 एंड फिक्स कॉस्ट ब्रिंग इट फ्रॉम वर्किंग नोट 3. ठीक है, ये हो गया. डू इट फॉर ईयर 2, 3 and 4. कॉपी पेस्ट कर दिया आपने. नाउ व्हाट यू हैव टू डू इज यू हैव tabulated the sales, the variable cost and the fixed cost. अब क्या करो? Now what you do is you calculate the profit, or I would call it cash profit or taxable cash flow. How would you get that? B minus C minus D. This is inflation वगैरह सब consider करके you have arrived at this number. अब tax on above and these are taxable cash flows. इस पे आपको लगेगा 30% tax, but tax is in arrears, so it will be 1 year बाद में. ठीक है. Now we'll remove the decimal points and all, don't worry. टैक्स हो गया. अब उसके बाद लिखो टैक्स सेविंग ऑन depreciation. This is essentially working note 5. कैसे आएगा? You have the values in working note 5 that you have calculated. And there is one more thing that is left, which is your working capital flows. So there will be cash outflow from T0 onwards. कितना होगा? From T1 to T3, there will be a cash outflow. Then there will be a release of working capital in T4. How much will it be? 820. See, now this is the tax This is taxable cash flow or cash profit. From that, you will subtract the amount of tax. You will add the amount of tax saving on depreciation. You will incorporate the working capital flows. And now I want you to write down the total cash flows. Total cash flows is line item A, which is investment in new machine, plus line item E. B minus C minus D is E. So straight away take line item E, which is cash profit, minus F, which is tax payment, plus G, which is tax saving, and minus or plus line item H for working capital. ठीक है, A पकड़ो, उसके बाद E डालो, उसके बाद F, G and H. ठीक है. Now your entire cash flow information is ready. Discounting factor at the rate of 12%, because that is the cost of capital given. Raised to 0, 1, 2, 3, 4 and 5. 1, 2, 3, 4 and 5. You will get discounted cash flow or present value, line item I into J for discounting factor. And what is your net present value? Which is present value of inflow minus present value of outflow. 1213.49. And since NPV is greater than 0, accept the project. So this is in short how you would tackle this particular question. Go through it once. If you have any questions, please let me know.